Hey everyone, and thanks for jumping back into the Cryptoverse. This is NFA Live, coming at you every Thursday. We have a new guest with us today, Nick. He is the CEO of Coin Bureau. So now you can put a face to the name. How's it going,
Great
Nick?
to be here. It's great, Ben. Thanks for having me. I'm finally jumping into the Cryptoverse with Mr. Bitcoin Dominance himself. So glad to be here, and of course with the legendary Rob Wolf.
Yeah, it's great to have you here. And I know we have a lot of questions to talk about today, so it'll be interesting to hear your perspectives on them. Always nice to get a fresh perspective instead of hearing Rob, me, and Guy repeat the same thing every week. But yeah, no, I'm happy to have you here.
Yeah, I wonder how many in the comments are going to be like the Jessica Nick comments, like, "Oh, where's Jess? What's happened to Jess? What's she looking like?" We usually get those kind of comments.
Yeah, no, but it's great to have you, and hopefully everyone can put the face to the name now. Nick, CEO of Coin Bureau, and guys, link to Coin Bureau Clips channel in the description below, as well as Digital Asset News. Rob, Digital Asset News, his links down in the description below. How's it going, Rob?
It's going pretty good. It's been a pretty good day. Nice little bump in the politics, thanks to Donald Trump. As he talks about how he loves crypto now. I'm sure everybody can either hate it or love it, but it is the reality. Anyhow, we'll talk about other stuff though.
No, that's fine. No, I think, I try to veer away from politics and religion. Those two topics seem like topics not worth discussing.
They are tough. They are.
But it is interesting because it seems like all these things that I don't really feel like should be a political topic, they end up being turned into political topics. I think Bitcoin can obviously be for everyone, but yeah, I do want to go through a lot of these questions. We have a lot, and the first thing I want to start off with is with Rob, because I know you have been sort of the guru on the ETF stuff, and I know we've been talking about this for a while, but it kind of seems like we're knocking on the door of the deadlines for at least some of the spot ETF stuff for ETH coming up here in just a few weeks. I've been under the impression that Ethereum would show weakness kind of going into it. I mean, it has a little bit, but it's still holding around 3K. But I'm curious. I was looking at some of the sort of the betting markets for approval, and it looks like there's only a 6% chance of approval. So I'm kind of curious, Rob, like, is the rejection already priced in? Is that all completely priced in at this point? Do you think the market will just shrug it off, even if it's declined, and just sort of stay optimistic about it maybe being approved sometime later this year or next year? I'm curious what your thoughts are on that, because I know you'll say you were wrong about the spot ETF for Bitcoin, but I will defend you because you were right for like 5 years straight, and I'm curious what your thoughts are here on Ethereum's ETF.
I don't think. I think it's you said, like a 6% chance that the Ethereum ETF actually gets approved. I just don't think there's anybody out there in Cryptolandia who thinks that, the SEC is looking pretty bullish and they're going to get going and they're going to make it actually happen, even though we had court documents that were released because of the Consensus Ethereum Foundation legislation that was brought as a Wells notice from the SEC to the Ethereum Foundation, and pretty much saying that Gary Gensler believes that Ethereum is a security, and he's not going to. I don't think this is actually going to happen, but I could be wrong. And then if you take a look at, there's a piece from CoinShares, and it takes a look at the flows by asset, and this goes over weekly and monthly, and you can see that the flows as far as into institutions, Ethereum has been on a downward trajectory for quite some time. And I don't think that, people will say, well, smart money knows. Well, smart money knows. First of all, I know very few people that are actually smart money. I think it's just big money. And there's a lot of dumb money out there. And I think that these people who have a lot of money, maybe they hear things or know things, and they're not really going into Ethereum as hard as what they used to. So if it is going to get approved, maybe a certain very small percentage of people actually know. I personally don't think it's going to be approved. And we'll see how it works out. But does that mean that this is a dead asset? No, it just means that it just delays the inevitable. So there has to be some catalyst moving forward. I don't know what those are. We'll find out. But I just don't think it's going to be approved. But hey, that's good if you're a DCAer. So congratulations, you got more time to accumulate.
If it is rejected, do you think there's going to be like kind of a long wait, like with Bitcoin, like where you have to wait like 4 more years? Or do you think it could just be like, let's kick the can down the road maybe a year and then approve it?
I think it all really depends on who's in office. I think it really comes down to that.
That's fair.
Yeah, the Bitcoin ETF, remember the Bitcoin ETF, it was approved, but it was approved by the slimmest of margins. There are, 5 chairs, Gary Gensler and Hester Pearson and the other 3. And it took a tie-breaking vote by Gary Gensler to say, yes, we're going to approve this Bitcoin ETF. The other 2 just said no. So it depends on who gets in office, who actually sticks around, and who actually gets moved around or fired or steps down. I think that's the big deciding factor, because it's not like Gary Gensler is really hot to trot on doing those things.
Right. Nick, what about you? I mean, I don't even know. What are your thoughts here on this spot ETF for Ethereum? I mean, are we kind of just at the point of like, yeah, it's probably going to be rejected, but do you think the markets will shrug it off? Like, what are your views on it?
No, I think it's pretty much expected they're going to be rejected. I mean, even the ETF issuers themselves are saying it's going to be rejected. I mean, I'll quote the Vanek digital asset analyst, and he said that if this SEC approves an ETF this year, he will, quote, eat his hodl hat. So if he's saying that, then you've also got other issuers like Matt Hogan from Bitwise Asset Management. He said it's probably best if we don't have an ETF approval right now, and he's asked that the SEC actually delays it. So I think it's pretty much priced in. I don't think the markets will be surprised. But I do think it's perhaps best, not just from the perspective of, it not happening, but I think when you think about the fact that, first of all, if they're going to be approved, let's assume hypothetically they are approved. People think it could potentially be price positive. Well, there may be an immediate reaction to that because they were pricing a rejection. But there's also the concern that there's not going to be that much demand to invest into it. Like Rob mentioned, some of the flows from institutional products into ETH ETPs and other sorts of collective investment vehicles. And if it's going to be a damn squib, I mean, think back to the ETH futures ETFs from last year. It landed like almost dead. And there's one other concern on this front, and this is regards to the Grayscale ETH product, in the sense that if you think what happened back to the Grayscale product when the Bitcoin launched, there was people who were trying to close out the premium and selling out Grayscale's Bitcoin asset, and they were dumping Bitcoin on the market. So if that happens now with the ETH ETF, if there is a discount for the ETH product from Grayscale, and then they've now converted it into an actual ETF, then there is the hedge funds, etc. that could try and close that trade, and it will have more ETH hits in the market. So I think that is probably serendipitous that we don't have it. I think it's probably best for the markets. I don't think the markets are ready for it, and I think it's already priced in, well priced in.
I saw someone say, I don't know if I agree with it, but it was an interesting idea. They said they hope it doesn't get approved this cycle because they want like this cycle to sort of be the focus on the Bitcoin spot ETF. And they think that if there's another one, it'll take the spotlight away from the Bitcoin one, and then Bitcoin won't do as well.
Yeah, I think it's also the market is taking some time still to digest the Bitcoin ETFs, right? Like a lot of TradFi institutions, asset managers, they're taking their time. They've seen how things are going. They're getting the protocols in place to be able to present these to the investment committees. So for them to now just get used to the concept of an ETH ETF as well, just when they're getting used to Bitcoin or just first introduced to it, they're not going to dive into it. So there won't be those amount of flows, even if you do see it, I think.
Right. Yeah, no, I mean, it's definitely an interesting topic, but I guess we'll have a decision. Isn't it like the end of May?
May 23rd, I think, is the deadline.
Okay. Yeah, only a couple of weeks from now. So I guess by the time we do NFA Live on this channel again, we'll have the answer to these questions. We can speculate on how long they're going to kick the can down the road for. Next question. So the halving is behind us. So pretty big event once every 4 years. One of the bigger events in crypto. Seems like everyone tunes in for it. I know Rob was super excited about it last time. But I guess I'm curious, with Bitcoin cooling off, I mean, Bitcoin has cooled off actually quite a bit from the highs, down from 73K. It's down to about 61, 62K or so. But with it cooling off, do you think that'll sort of pave the way for some of the other projects that have taken a back seat for a while to sort of shine for a few months until maybe Bitcoin picks back up? What do you think about sort of that idea? Or is it everything's either Bitcoin or nothing. What are your thoughts?
Ben, you could have just worded this as when alt season.
Yeah, no, I mean, well, but even to be fair about that, I mean, like there were definitely phases in the last cycle where it wasn't alt season, but altcoins still did okay, So I'm curious. I think even the summer of the halving year, altcoins did okay. But I'm just kind of curious, like, what are your guys' thoughts on that for the summer months, especially now that because for the longest time we had all these Bitcoin narratives. We had the spot ETF, we had the halving, and I mean you could even argue that the potential rejection of the one for ETH is sort of a boost for Bitcoin. But as we get out into the summer and all that's behind us, what are we looking at? I'll start with you, Nick.
Yeah, I mean, I guess it's going to maybe shift to narratives. I think narratives are an important thing that drives the altcoin sector right now. Like most people will be investing based on narratives. I think that it's going to depend on what's a favorable retail-based narrative. Is it going to be the RWA narrative? Is it going to be gaming, or any of these other altcoin narratives? But I think more intently, whether these projects will do well and whether there'll be an interest in altcoins in general will come down to broader macro conditions, liquidity right now, right? Like we've seen that interest in altcoins and interest in crypto has dipped a little bit since the halving, being seen it's in terms of metrics, from social metrics to search metrics, and trading volumes are down like 43% from last month. So I think that we need some sort of a catalyst that's going to drive an interest back into the altcoin space. Because obviously now Bitcoin halving has come. Now it's going to be an altcoin season potentially, but we need some sort of a catalyst, because it can't just come about we're going to chase the next gains in altcoins unless you have the right market conditions for people to move into altcoins from Bitcoin, the rotation, right? And I don't think that right now the conditions are right for that. So I think, I don't know. I don't think it's necessarily the question of whether they'll be able to shine now that Bitcoin's no interest in, or like less interest in Bitcoin. I think it will just entirely be driven by whether there is going to be market conditions that provide the catalyst for people to want to invest in these asset classes. Because a lot of the time, a lot of the interest that drives interest in altcoins or specifically is price action, right? So you think about, like, it gets picked up by the mainstream. Oh, this particular coin is up 100% in the past few days. What is it doing, and what sort of sector it is in, and what sort of narrative? So it's price action drives interest, retail interest then begets more retail interest, which drives more price action. So that's what's needed, some sort of market conditions to be right for it.
Yeah, it does seem like we need some sort of catalyst to get the ball moving there. And I mean, maybe that catalyst is just a Fed pivot at some point, but seems like there needs to be something. I guess maybe the spot ETF for ETH, if that were approved, maybe that would be the catalyst. But
yeah.
Seems like there needs to be something. Rob, what about you? What are you thinking for the summer? You're muted, Rob.
So I got a new mic. So I can agree with what Nick is saying and price action and narrative and things like that. But I was taking a look back at, because even if we have the narrative of the different products that are coming out, even if we have the spot Bitcoin ETF really pulling in money, from January when it was actually approved to now, I mean, there was a nice inflow, but it seems like there's a plateau of how much liquidity we are putting into this market. And now it seems like we're like at an equilibrium around 2.4 trillion market cap, somewhere around there. Mm-hmm. And I was taking a look at just like Nick was talking about, the catalysts and the narratives and what was happening. And I took a look back at right around or before around February, March of 2020. And just what the narratives were. There's a great website called 99 Bitcoins. And it takes a look at, it's a graphical representation of the Bitcoin price, and it overlays news stories and items and like essentially catalysts of what was happening. And if you look at it as it goes from left to right, there's a lot of things that were happening. There was, of course, quantitative easing in March after that coronavirus. And there was then the negative, which was China shutting down all the miners. And there was different institutions that were actually buying Bitcoin. Then, of course, it was Tesla accepting Bitcoin. But if you just take a look at all those things, those narratives and whatnot, and if you just overlaid it with the M2 money supply, it's like perfectly from March 2020 to January 2022, it just goes in from left to right, up, and the same thing. And it's just, I just think that, I mean, it'd be great when there's a pivot, but really we need a lot more liquidity to come in the market. And I think people are maybe not so keen on spending into risky assets, especially as we see credit card debt as an all-time high in the United States. We also see a lot of things that are going on with the macro. So I just think there has to be, yeah, it'd be great for a pivot. I think there has to be some injection of a little bit of liquidity.
Yeah, I think the money supply has been relatively flat for the last couple of years, right?
After that nice big boom, that's what we do here in the United States. We print money.
We print money, and then we live with the consequences of it for a couple of years.
Yeah, those are for our grandkids. They'll figure it out.
Yeah, I guess not for a couple of years, for the lifetime. Next question. We're gonna switch over a little bit here to macro just for a minute. I know everyone is kind of like, oh, macro, no one cares. I only do like 1 or 2 videos a month on macro at this point, but we did see at least the Fed keep rates at 5.5% again, so no big changes there. And one thing that I keep seeing people say is that they're not going to pivot before the election. Of course, the election is coming up this November, so about half a year away. And I'm kind of curious, like, do you think that they actually are going to make it until the election or until after the election to go to lower interest rates? And then also the other question, sort of a 2-part question, is Powell mentioned that in June they're going to start to taper QT. They're going to start to they're still going to reduce the size of their balance sheet, but they're not going to be doing it as aggressively. I'm curious if you think that might have an effect on the markets as well. So Nick, we'll go to you on this one. So just you think there's going to be a reason to cut before November? And do you think that tapering QT will have any noticeable effect on the market?
Yeah, I mean, Powell is Fed is supposed to be completely independent, right? Not driven by politics at all. I mean, interest rate futures are pricing in a potential pivot in September. And Powell has always said, even when he's been speaking in these meetings, in the FOMC meetings, is that he's driven entirely by data. And then when he's asked to refer to potential political events, he says he doesn't comment on that. I think I'll take him at his word of that. I think that the Fed has proven they're trying to be data-driven. So it's going to be related to what the numbers look like, from the inflation numbers to now, of course, a lot of eyes are on what's happening with the unemployment, right? Because it's at 3.9%. And, if we look at it's going from April to May now, and, what happens with the, unemployment rate last year, it went up by about 0.3% in this time period in the year. So all you need to go is over 4%, and then you're already over the Fed's, limit for unemployment. Then they need to start talking about the employment figures, which is, of course, the other part of the dual mandate. And then the Fed will be more incentivized, or more motive to actually think about, we've got to start easing. So I think it's definitely going to see a pivot before the election, because it just seems like it's going away from the data and the trends. And in terms of the second part of the question, with regards to quantitative, the reduction of the tapering, the reduction of the speed of the bonds on the balance sheet. I mean, 35 billion extra per month of liquidity coming out starting in June, it could have a decent impact on the markets. I think that obviously markets reacted, the Fed has said it. And this is just additional liquidity that can flow into the market before we start seeing any sort of pivot coming. So how much of an impact that will have necessarily, given that it's potentially priced in right now, will take some time to work through the markets. But yeah, I think that that will still have an impact. But I think one other factor, which I would keen to get your take on this, Ben, as well, and I've seen a lot of talk about this in the crypto space specifically, is although the Fed isn't political, right, the Treasury is. And there's all this talk around what is going to happen with the TGA and the Treasury General Account right now, because it's on record highs, and they're going to, the target in September is like 850 billion within the TGA. And it's now sitting at something like over 900 billion. So that's going to obviously, that's being pumped out of the TGA into the markets by buying back bonds. That's more liquidity into the markets. And if you were to put your political hats on, Yellen obviously may want to try and help Biden out, I don't know. And that could lead to more liquidity at a time when it's going into an election year. So yeah, that's what I've seen as well. Another factor to consider is what's happening on the Treasury side. This is something that Arthur Hayes has talked a lot about in a lot of his analysis. Bad girl Yellen, that's what he says.
Bad girl Yellen.
Yeah, no, I think, like if you look at there's sort of like these we have like a net liquidity indicator, but there's a lot of like people that track net liquidity, and one of the things they do is they subtract out the TGA and the reverse repo because precisely that reason. They know that Yellen is gonna sort of try to do what she can to keep the markets afloat, right? To sort of send that. And it's been a kind of a difficult situation, I think, for the Fed, because on one end you have the Fed, they're trying to, slow things down. But then on the other side of the spectrum, you have Yellen just not really wanting to play ball. And I think because of that, that's one of the reasons why yields have just gone up so much. And, one thing, and you've probably seen a lot of people say this too, and I tend to agree, is that either the Fed is going to do what they need to do to get inflation under control, and if they don't, the bond market will take care of it. Because if the bond market, who's going to buy the debt, right? I mean, if the bond market senses that all this money is just going to keep flooding the system, inflation is just going to be persistent, then the long end of the yield curve is just going to go higher, right? And that's just not going to be great either. So either the Fed will take care of it or the bond market will, but they are really great at kicking the can down the road as long as they can. I have to give them that. Rob, did you want to take this one at all?
Nope. I defer to the experts on that one. Excellent responses, gentlemen.
I don't think there are macro experts. I think we're all just sort of winging it and doing our best. But no, the macro is really difficult, I think, to navigate, especially because you have sort of competing forces, as Nick was just talking about.
Go and hyper-analyze. What was that? I went and checked out some of the RAM indicator. I was like, wow, Ben's got some really cool indicators to focus on, to think about employment, unemployment. The RAM indicator, is that what it's called? The one that can predict unemployment rates going up, or?
I don't know about that one.
Okay, cool.
Ben's got so many indicators even he forgets. That's why I steal all this stuff and put it on my channel.
I mean, there's like the SOM rule.
I'm sorry. You're right. SOM rule. My bad.
Yeah. So like I think we're currently at like 20 states where it's triggered. But I mean, it's still not at like 50, which is, it's sort of like some parts of the country are showing a little bit of weakness. But there's some states that are really strong in terms of labor market. I think Massachusetts, I think that was one maybe. There was some New England states, and I think also some in the South, I think even like Texas and Alabama, I think those unemployment rates are actually pretty okay. But then you have other places like California and DC where it just looks absolutely awful. And I mean, I think it's because those are the places where, I mean, if you think about California, the tech industry, they need basically cheap money to sort of fund all these, crazy startup ideas. And then you have all these startups that were operating under 0% interest rates that were underwater with 0%. And then of course they can't survive at 5%. So California's taken a much bigger hit, I think, than a lot of the other states, but some places are definitely still holding up. Next question. And this is sort of piggybacking off the one from earlier, and we have talked about this before, but we're getting a little closer to 2025. It's only a little over half a year away. And, I remember going into 2021 and NFTs were not on my radar at all, right? I mean, I don't think they were on many people's radar. I think there was a few people that really saw the potential there with NFTs going into 2021, and they did really, really well. But again, it was something that was on absolutely or almost nobody's radar. So I'm curious, is there going to be something else in 2025? Like, what is the NFT craze but for 2025? And obviously, there's no way any of us could know, but are there certain sectors that you think will be focused more on in 2025? Because I mean, it's always so hard to know, but I'm curious what you guys think. Rob, what do you think?
Narratives are always, it's a tough call, but I've always said the same thing, that I think there's going to be really 4 narratives. And I think, and Nick and on the channel talked about this as well. It's real world assets, tokenization. It's Web3 gaming, It is DEXs, decentralized exchanges, as we start to fall out of favor with the centralized exchanges because of what's happening with the government here in the United States. That's just for Americans. And then DPIN, I guess it'd be actually one more. And I think this is going to be one of the sleepers, which is the layer 2 solutions for Bitcoin. I know people they don't really see it yet, but a lot of people are kind of starting to work in that sector, because why wouldn't you use the most decentralized, most secure computerized network in the entire planet and build on top of that? So you have things like Stacks and Core, and even it's a funny thing. It's amazing how the narrative shifts. Michael Saylor back in 2013 talked about how Bitcoin was going to die, and then he became the huge bull. And then we started to talk about ordinals, which are NFTs on the Bitcoin blockchain, and all the Bitcoin maxis hated that. Michael Saylor was no exception. And all of a sudden he started to study it, and all of a sudden he said, you know what, there's something to be done here. And now they're actually using ordinals to verify your digital ID through a product built by MicroStrategy. So I know people will say, well, I hate ordinals. You may, but I got to tell you right now, there's actually a pretty good use case. And we'll see if they can, and this is why I think layer 2's solutions will get a big foothold into Bitcoin, because you can't keep doing that on the layer 1 solution without slogging down the system and having high rates. So I want everybody to kind of pay attention to that, because I think it could be a big narrative.
Yeah, I feel like a lot of people have been kind of like anti-ordinals.
Yeah, and then all of a sudden they figure out what they can do, and then Michael Saylor's, let's do that, and all of a sudden they have this product out.
Yeah, no, I mean, like, I think we have to accept that it's going to be an ever-changing industry. And I mean, look, at the end of the day, the market decides. You know, if the market says it's important, then it's important. So far, that's what the market has said. Nick, what do you think? I'd be curious to hear your thoughts. What
I totally
2025.
Yeah, 2025. So yeah, I totally agree with Rob. With one of my picks is definitely Bitcoin L2s. And I think that I referred to a recent Masori report where it said that, you know, Bitcoin L2s are not a luxury, but a necessity. And it's important because as we grow and as the Bitcoin network ages, and as we approach the 21 million limit, block rewards are going to be less of an incentive for miners to sustain the network, right? And you're going to have to start relying on the fee market, and miners are going to have to start earning fees. And this is where the L2s come in, because if you're doing settlement on the Bitcoin network and they're going to have to pay fees to do it, this is where miners are going to get extra fees to be able to sustain the network, and you therefore ensuring the long-term security and sustainability of the network. Also, you're adding additional value to the Bitcoin network to all holders, because there's more value built on top of it, right? So you basically not only building on the most secure network there is in the world, but you're also adding value to that because of all the exciting dApps and ecosystem built on top of it. So there's, you know, I think, yeah, Bitcoin layer 2s is a very exciting one for 2025. I've seen a lot of exciting projects in this cycle that have been raised in the private cycles that have got very high valuations. I think there's a lot of excitement, especially for the stage at which they could actually integrate BitVM and settle rollups on the blockchain. So that's going to be a big milestone, because that's where you'll actually be able to literally properly have these rollup solutions and other projects building on top of Bitcoin and not leveraging other networks. So yeah, Bitcoin L2 is definitely one to watch. And then one more I'll put in there. I think it's infra and modularity. Modular solutions for cryptocurrency blockchains, as opposed to the concept of these monolithic large block, L1s that have to try and solve the scalability trilemma, and they have to always, compromise one for the other, trying to get speed, trying to then worry about decentralization or security. Modularity is the concept of the plug and play blockchains, where different projects will build and work on different stacks within the blockchain architecture. So from the settlement layer to data availability, things like that. And there's already quite a few projects in the space. I mean, probably the most well-known is the likes of Celestia. And then there's, of course, a few others like Dimension and Lava Network and a few others. So I think that's a big one, because I think that the reliance on these monolithic L1s that are trying to outgun each other for decentralization or speed, or something that's very hard to solve, the scalability trilemma. Whereas if you think about plug and play blockchains, it's kind of like you think about building a car, right? These different components are best optimized in different factories, and you put them together and you've got the best car there is. Whereas relying on particular one production line that is not going to be able to specialize in one particular part of the blockchain stack or the car. So yeah, I think that's an exciting one to watch 2025. It's already exciting right now in the private rounds, lots of projects raising, but I think that's one to watch for sure. It's not very retail friendly. That's one thing, in the sense that it's not something that is easy to understand as like gaming or RWAs, and you can't immediately see it. But if you think about the fact that all of these narratives are going to have to build on architecture that is scalable and highly performant, then I think that modularity is an important one.
One of the things I've seen with the whole gaming stuff in Web3, and there's a couple comments that kind of express this sentiment. Here's one. Someone says Web3 gaming is the worst experience ever. And then someone says Web3 gaming is not gaming. I'm just curious, and I've thought about this for a while. Like, I remember back in 2020 and 2021, I remember everyone was excited about the Metaverse. You guys remember that?
Oh yeah.
And I remember checking out some of the different metaverse things and even walking through some of the different environments that have been created, and even looking at some of the games. And I'm just like, this is not the future. There's got to be something else. And I do hope that we can get there. And I think we will, but I think there is a lot of validity to the idea of kind of seems like, and I've said this before, it feels like what we've mostly seen are crypto people try to create really bad games, and then they just incorporate crypto into it.
Yeah.
But what we really need these gaming, we need gaming in the industry as a whole to incorporate, they already know how to do gaming. Let them.
There's two projects you can look at for that, Ben. There's two really exciting games that are being developed by gamers that are going to, the crypto components will be ancillary to that, right? And I don't know,
I've
Rob,
heard about a couple of them, but what are they?
Well, I mean, I'm sure you got. One of them is off the grid, and then the other one is Shrapnel. These are Shrapnel's out already pretty popular. I've seen some of the gameplay. Look, I'm not a gamer, but I wouldn't be. I think that it looks pretty much like a normal third-person shooter anyone would play. We'll have to see when it comes out and what the reviews are like, and whether gamers are as averse to it, and just literally. But from what I see, it looks interesting. And I think that's the one thing. Games have to be developed for gamers, and it can't be gimmicky. It can't be just some sort of just jamming the tokenomics in there, trying to force them to use it, because then they're not going to want it. It's basically got to be something the gamers. I want to play it first of all because it's a cool game. Then we can consider all the other crypto economic factors later.
Right. The integration has to be seamless. It can't just
right.
be. It can't just be let's just throw something together. People have to want to play it regardless of the crypto component, I think. And that's what will make it really successful. Last question. And I've seen some comments already kind of asking about this, but I mean, there's a lot of other markets besides crypto. I know, Rob, you follow the real estate market, so I'd be kind of curious to hear an update on that. But besides crypto, what other markets are you guys following? Rob, I mean, how's the real estate market going right now?
I mean, it's great if you're selling. It's not so great if you're buying in certain areas. And we just last month and this month, we just sold 2 of our condos because, I mean, the prices are getting a little bit crazy again. And even though the interest rates are higher, people still want to buy real estate. So if you want to buy it and there's ridiculous offers out there, I'm going to take it. And that's kind of where we're going. But it's not just that, but there's another sector that I think is more interesting. It's a little bit more complex, but it's real estate and their subsidiary loans. So there's different individuals and commercial real estate that people would say we need a loan for this. We can only cover this. Okay, if you want to do a loan, we can do it. There's a legal process. We can do it, and then we can give you that loan for X amount of percentages, and then the collateral would be the entire facility, the entire property, the entire land, or whatever it is. And then over time, it's a pretty good business model, and there's not as much. It's not volatility. There's not as much risk as long as you have the legal process in place and you actually have the collateral that's on the contract. So that's the one that we're doing more of now.
Do you think? Go ahead.
No, I know that's going to be that's a way off topic, and I probably won't ever talk about that again because it's not for my channel. But that's just one one other market we're into.
I feel like a lot of people watching this are actually really interested in real estate, because I think, a lot of people do investing in crypto and other markets often because at some point they want to be able to buy a house.
Right.
They want to, at some point, investing is a means to have a better life, right? I mean, you want to be able to use it to support yourself, support your family. I mean, like with the real estate market, with prices still going up, I think I think I've read about some cities prices have gone down a little bit, but I feel like still in most cities, and even where I live, prices are still generally trending higher. Like, do you think there exists a future scenario within the next 5 years where real estate prices actually come down, or is it just kind of up only?
I mean, in certain areas, they'll go down precipitously. They'll go down pretty fast. But in certain places, we just talked about California, Texas will stay the same. Florida will pretty much stay the same. Massachusetts, Puerto Rico, I mean, they'll pretty much stay the same. The only thing is, and especially when the Fed comes in and starts saying, okay, quantitative tightening, we're decreasing that. We're going to pivot, and then we're going to do quantitative easing. What do you think happens to the price of all the assets? They just go up because there's more money. So I think it's going to be very difficult moving forward, and people are going to have to find alternative either places to stay or alternative type of housing, unfortunately. And I will tell you this: that's why we invest into Bitcoin, because if you take a look, there's a website, bitcoin21.com or 21bitcoins.com, where you take a look at from 2012 of how much it costs for the typical price of a house, which is around $214,000. It costs you roughly 66,000 or 64,000 Bitcoin. And then if you overlay it, it just kind of inverts. And you can see that now that the typical price of a house is 413,000, 423,000, somewhere around there. And it costs you between 6 and 7 Bitcoin. So there's a reason why we're into it, and it's a reason why we understand it. And there's a reason why the people that don't are going to be buying Bitcoin at the price they deserve. And I can't help them.
So you're saying there's a reason we talk about Bitcoin every day for the last 4 years?
Yeah, I'm trying to help people, but I mean, I can't save everybody.
Yeah, Nick, what besides crypto, Nick? I'm curious, what asset classes do you follow?
I guess I'm the kind of guy that basically only keeps laser focused on the things I've got bags in. So it's mostly crypto, man. But I will say though, it's interesting discussion around real estate, because I also do, I do own some property here in Dubai, and I have been following that market quite a lot. And it's a crazy market itself as well. I mean, especially in the fact that there's a lot of other things driving Dubai property market that aren't relevant in many other countries, in the sense that it's just like cash buyers buying like entire buildings that before they've even laid a single foundation 10 years into the future for payment plans, and then constantly getting flipped. And I get at least 10 calls a day from Dubai real estate agents trying to buy mine off the market. And it's just, it's crazy. It's like a different kind of market in the sense that, it's going up a lot. It's probably one of the hottest luxury property markets in terms of like in the past year or two. There's many other factors driving it, like major instability, people moving to Dubai. But yeah, that's what's been between that and crypto is what we focus mostly on, right?
Yeah, I'm seeing a lot of comments in the chat from people saying they are really interested in the real estate market if they could afford it. And that's like the hard part, is like, I feel like everyone would love for prices to go down, but they're not. I saw someone ask a question earlier. I'm curious because the EV market I have found interesting. I've also been kind of skeptical about Tesla really since 2022 began. But I am a long-term bull on Tesla for sure. I just think that they really need they really need lower rates, I think, is what they need in order to start doing well again. What are your thoughts on Tesla long term? I mean, you guys probably see the Teslas driving around town. We've seen recently, I don't know if you guys were following, but recently with Toyota, so Toyota's been obviously focusing a lot more on hybrids, I think. And there's been a huge shift recently away from pure EVs to hybrids. And I'm curious because, like, back in 2021 and early 2022, it seemed like most people were just like, it's, the Tesla will continue to just go up. it's really just gone down since then. Now, I think at some point it will pick back up, but what are your views on that? I mean, is sort of our hybrids, what is that what we're going to settle on, sort of like an in between, or do you think Tesla can be successful long term? Either one, if you want to take it.
I'll let Nick take that one.
If you don't want to take it, that's fine.
I'm fine. I mean, I haven't been following Tesla, to be honest. I don't follow stocks.
Yeah, no, I mean, I've looked at it. It's basically I'm wanting to see it put in a higher high, right? It's been putting in lower highs essentially since 2022 began, and my guess is, I mean, at least last cycle it started to do well after the Fed started to lower rates. I just think that, you know, with auto loans and everything, and also I think the hard part with the Teslas, one of the hard things about it has been that, you know, when the battery dies, I mean, it's kind of, I mean, not, yeah, I mean, you're not going to replace it, you know, you're not going to go replace that. And so the price of used Teslas has been dropped. I think the price of used Teslas is down like 50% over the last couple of years, which has made a lot of buyers unhappy.
Yeah. Ben, do you own stock in Tesla?
Back in 2013, I was very, very bullish on it. But I remember telling my wife, I was like, all right, I think Tesla's going to do really well over the next decade. But unfortunately, I was right, but we had no money to invest in it.
So close.
I did start getting into it though, you know, still like in 2019. And really before the big run up. But had I gotten in 2013 and had I been, you know, DCAing for like 6 years, I would have done a lot better than if I, you know, than just sort of waiting until later on to really go into it. But I've been pretty bearish on it for like 2.5 years, honestly. I think maybe I should have pivoted back when it was at $100. But I don't know. I mean, maybe it'll go back, take out that low. My position now is a lot smaller than it used to be. Like I'm sort of, I've had it's like a toe in the water, but I also think it really needs to get to lower rates and then I think it'll start to go back up. But until then, I just think it's, you know, it's been struggling.
Yeah, you know what? Just to piggyback on. I'll go ahead, Nick.
Sorry, do you own a Tesla? I'm just curious. I mean, Rob probably doesn't strike me as the kind of guy who drives an electric vehicle, but
no. I drive a 2018 Dodge Grand Caravan minivan, and I don't want to flex on people, but you know, it is the Lambo of minivans. I'm just saying, but just to piggyback on what you said and what you said, Nick and Ben, is that, you know, you talk about Tesla and, you know, you should have dollar cost average, and Nick said, I'm just going to hyper focus on the things that I really know about. I got into Tesla in 2021 during the peak because I'm like, this is easy. This is an easy play. I'm gonna invest in this. I invested into it in Robinhood. I didn't dollar cost average. I did some lump sums at the height, right? And then during the whole market, I didn't even touch it. And then when I went back 3-4 months ago, whenever the S&P 500 hit their all-time highs, I look back, I'm like, damn, I didn't make any money really because I didn't dollar cost average. I didn't follow it. I don't understand it. Why am I even into this? So now I just, like what Nick said is perfect advice. Just stick to what you know and hyper focus on that. And then of course, what Ben said, dollar cost average, and as time goes on.
Yeah, I mean, I followed it and I started to get into it before the mania. I don't remember exactly when it was, but it was before it took off in 2020. And I can't remember if it was 2019 or not, or early 2020, but I just remember thinking, like, when it went up a lot, I remember like being like, okay, is this actually happening? And then from there, it went up another like 400% or something, even from the point where I was like, is this real? You know, so that's why by early 2022, I was like, all right, I think it's going to be going through kind of a long bear market and then into a consolidation phase. It actually did the same thing about a decade ago. It had a massive rally back then, and then it basically went sideways for like 7 or 8 years, and then finally had another run up. So maybe we're just kind of repeating that process right now.
Yeah, I would like to quote Peter Lynch, and he said, you know what you own and why you own it. So it's basically like, for me, when it comes to stocks and everything, I mean, unless I'm hyper focused on that particular stock and that particular sector, I don't want to diversify away too much from the things I'm focused on the day to day.
I think that makes a lot of sense. You know, do what you're good at. And I mean, even some of the greats have always said, like, you know, for most people, you're better off just buying the index. But if you're an expert at it, you can sort of pick the few outperformers. Someone says minivans, the most underrated vehicle of all time.
I'm telling you, for space, for gas mileage, for comfort, and then if you got to, truck around a bunch of kids, Ben's got 4. I'm just saying, Ben.
I think we're gonna cave. I think we're gonna get a van soon.
You're gonna love it. You're gonna love it.
Rob, you have something in common with CZ, man. His cars also. He's a fan of the minivans.
See, yeah.
There we go.
Yeah, exactly.
Do you guys have any
billionaire
questions?
mindset. Minivans with the new billionaire mindsets. They're the new Lambos for the bull market.
Exactly.
Yeah.
I'm trying to see if we have any questions in the chat. I think I forgot to ask. Someone says, "What? Go ahead."
I was gonna say. I saw one where someone said, "Hey Ben, when they didn't understand when the Fed pivots, is that altcoin season? Do I buy now? Or do I buy later?"
I mean, I think it also depends on QE. It's not just it's not just lower rates. It's also turn the money printer back on, and then pray, really hope that they don't induce a second wave of inflation. I think that's the issue, right? If they turn the money printer back on too soon, then we're going to repeat the 1970s again. If they wait too long to pivot, then you might have a deflationary period like we had coming out of the 1940s, and that was after all the money printing from the Second World War. So I don't know. I think you need lower rates, but you also need QE.
Yeah.
All right. Okay, so here's a question. I haven't even read it yet, so hopefully it's a good one. If easy money is what fuels crypto rallies, why was the 2021 bull market tempered considering record pandemic stimulus and record low interest rates? Why wasn't there a record bull run?
I thought there was a record bull run in 2021.
Yeah.
But go ahead.
I think maybe the confusion is that, like, I think, as Bitcoin becomes a larger asset, you're going to have diminishing returns, right? It's just going to take like exponentially more money to move it. So that's why it feels like it's not as big, but that was still a crazy bull market.
That's some of those altcoin returns in that cycle. Smaller cap altcoins. Remember what Sol did? Sol round tripped up to over 250, or close to 250 from below 10. So there were some of the small. That was a pretty aggressive bull run. And think about even the NFT cycle, like some of the crazy money going into these NFTs. So the liquidity found its way in. Yeah.
I mean, a lot of altcoins were up 100x, 200x, 500x. I mean, there was a crazy bull market back then.
Yeah.
And don't forget all the shenanigans that were going on behind the scenes with the FTXs, the Celsius, the Voyages, and the BlockFis. They were supposed to be buying Bitcoin and actually supposed to be trading it, and they didn't. So it's like, I think we got screwed out of a real bull run, and this could be the next bull run.
Yeah.
Yeah, I mean, you could also argue that the inflation kind of tempered it too at the end, but I mean, I don't know. I mean, at the end of the day, Bitcoin peaked when it always does, Q4, right, of the post-halving year, and it went up 20-something x from the bottom, like a little over, maybe something like that. So it still was. It was so impressive considering that the market cap was so much higher than it was in prior cycles. Let me see if there's a couple more questions here. Some of these things I don't even understand what they're asking. Oh yeah, someone says it went up 23x. Yeah, I guess that makes sense because it went from 3150 up to about 69K.
Yeah.
All right. How well will Bitcoin miners perform in the crypto bull run after ETF approval? If you look at some of the miners, the things like Marathon, Digital, and CleanSpark, I mean, they have not been doing as well recently. So what are your thoughts on some of those?
Yeah, I mean, it depends on obviously the halving, how well they prepared themselves in terms of their balance sheets and reserves to be able to handle the reduction in revenues from the halving, right? If there are going to be miners that capitulate, how long will it take for the capitulation to take place before difficulty starts adjusting, and then it becomes easier to mine, which is another question entirely. So I think that right, and there was obviously a lot of excitement immediately after the halving for miners when it came to the ordinals and runes, especially runes. When runes drove fees to the roof, they thought, okay, this is going to be able to help us generate more revenue apart from just the block rewards. But that has subsequently fallen quite a lot in terms of the excitement with regards to runes. It could pick up again. We talked about these Bitcoin layer 2 solutions that are going to be driving demand for the network. But right now, yeah, it's a wait and see. I don't know. Marathon and a few of the top listed miners did have a lot of reserves going into the halving and seem to be well capitalized. But there was a lot of analysis that was done before, and that said they could perform well, but that was assuming that the halving would have the impact on the price, in the end. And right now, it's been down. Well, it's down from the all-time highs. Obviously, there was quite a fall after the halving. So there is concerns, especially that the average break-even cost for a lot of these miners is around the 50K level. When it fell to like 56K or so, people started sweating. So yeah, it's a little bit of a difficult time now, I think.
Yeah. Well, hey guys, I gotta wrap it up. Actually, we got to get going here. But
Cool.
I do appreciate everyone tuning in. And next week we will be on Rob's channel, I believe.
Yeah.
So we will see you guys then.
I will be back. See you guys then.
See you guys. Thanks, guys. Bye.
Thanks, Ben. Thanks, guys. Cheers.